Hi everyone and welcome to Inderes TV, sitting today here with Otto Pukk, CEO of Incap. Very welcome.
Thank you very much, Lisa.
Very dramatical terms today. I heard you published your Q4 and the book's closed for 2023, and you used expressions like the darkest hours and new starting point. Take it away from there, please.
Yeah, no. Of course, the year is what it is. We were challenged with this destocking exercise, and for us, of course, it's a dual feeling because, as I mentioned, we have been growing on all other accounts except for one that was our biggest, and that takes our figures down. But even in this huge and of course this has been very stressful. We have laid off more than 1,100 people and so within this, so this has been very challenging time. But on the same time, even when we have done this, and even in this big dark exercise on that sense, we have maintained profitability. We are even, if you look at the year, we did yes, less revenue than the year before, but still 221.6 million in revenue. We keep a good EBIT within the EMS industry of 12.7. Even if you look at the result for Q4, then which we believe was the low point in during the year, and that's, like Winston Churchill said, the darkest hour in that sense. Even there, we are doing 8.7% in EBITDA, and if you take away the look at the adjusted operating profit, it's 10.4. So even with all the layoffs, all the things we are doing, we are in black. I think many companies would have been in dark red doing this kind of big maneuvers. But this gives all shows how flexible our model is. Our model is flexible when we are ramping up and helping our customers to grow, and it's also flexible when we are ramping down. And so from that sense, it is dramatic. It's I think that we don't see results like that in these kind of tough challenges very often. And as I said before, that for me it's a little bit dual. Yes, the result is not as good as last year, but I'm very proud of the team, and I'm very proud of how we have actually handled this, and now it's a new starting point. Now we start looking quarter by quarter. We expect to grow. So nothing dramatic, huge, but still we are growing, and then we are back on a trend like that. This year will be still smaller than the previous, and that is due to that we had, of course, a crazy high first half last year when our customer was very much buying and getting too much stock, and so we won't bounce back to those volumes, but still I think there is not I look positive even on this little bit negative outlook in that sense, or a little bit reduced outlook. I still think it's something positive because it's a new start, and also the customer dependency and so have changed. Now I'm talking too much. Normally you are the one asking questions, Sandra.
Yeah, I'm taking over here right now. So, but if you look going forward at outlook for 2024, as you already stated, that you will have an decreased revenue and operating profit, but you will still see. But let's talk numerical terms there. Could you give me? Is it like less than 2023? Is it 1 to 20%, or how much less than 2023?
Yeah, we said that we will be lower. That means that in this first bracket, so if you look at how we give our steering, we have this lower, then we have clearly lower and significantly lower, or the other way up, that also higher or clearly higher or significantly higher. So this is within this first 0 to 20 brackets that we expect.
So that kind of lowered, referring to 2023.
Yes, exactly.
Yeah, but then you said that you will quarter by quarter kind of that this destocking exercise that you're doing with the largest customer, the effect will be the biggest in the first half of the year, and that you will grow quarter by quarter Did I understand this correctly?
Yeah, quarter by quarter we will grow over the whole year, I expect. But expect if and we are growing. If you look at all other accounts currently are growing on except our biggest one, and also our biggest account. If you look at now quarter to quarter, then slowly we are seeing a pickup there as well. Even if we expect that the volumes or the destocking exercise is still ongoing and here during the first quarter, but we still see that the bottom is reached, and we slowly will expect now to see an increase in the volumes over there. That said, of course, there is still early in the year. There's always so that there is uncertainties and profitability-wise, it's always so that the product mix is the most steering factor. I mentioned that in the market generally there is a price pressure. Let's see how that impacts us and so on. It's early in the year, and you who have followed us for a long time, we are quite cautious in the beginning of the year in that sense. So let's see how it plays out. But for us in Incap, we feel that this we have reset the table, and now we are from Q4 starting to pick up and start working on growing the company again. Though quarter to quarter, not perhaps year on year. Still, but we will get there as well. I'm quite sure of that.
So to summarize, we see it's growing every other customer, but the biggest one is the destocking problem still on. But if we look
slowly picking up. So there's growth quarter to quarter probably there as well to be expected.
Yeah. So what about this? If you look at the India, if I've understood it correctly, this is the most profitable site that you have. So would it be wise to fill it up with other customers, or kind of wait for this, the biggest customer you have, to get back on track with their destocking process in order? Or how are you tackling this? Both ways, or?
Yeah, no, we are tackling it both ways in that sense that we are working, and we have been also, if you look at the other accounts in India, have also been growing this year. So it's not exclusive for the European ones. So that is, but you should remember that the sales cycles in our business can be 12 to 18 months, and there's nothing you do quickly. And the sales work that we have been doing the past years, we see effect of slowly in now in that sense, and it will be so moving forward as well. So there's no quick fixes in our industry. It's not so that we suddenly can just increase the volumes in India by I don't know, yeah, we need to work and develop those customers to get there. And also it's not that so that you can move business. So our business is there for a reason in the different factories. So it's not so either that you geographically just put something that we are doing in, I don't know, Estonia and put it in India. It doesn't work like that. Our customers don't want that. So there's no quick fixes, but we are working on it. We are increasing the other accounts. I think we are good at it, and we will continue at it.
So do you see any risk with this biggest customer that COVID kind of boosted them and then we'll never get back to, okay, you see it positively, but is there also a risk for the biggest customer that they will not reach the same levels as they did before the pandemic?
I think that the same levels, they have been growing through the pandemic, and they have continued to grow now as well. Even if they are doing the destocking exercise, then their sales have had a positive development, not as quick that they expected. That's why they ended up with destocking. But still, it's that they are on a growth track, and I think that they are in a sweet spot in that sense. In their products and applications are in many of these mega trends and growing sectors. So I have confident in that their business will also continue to develop. But yes, perhaps not as quick that during the COVID years. So if you look at Incap's big jumps where we were growing 60%, year on year and so on, during that time they were as well growing. That of course we have been doing this hand in hand. But now. If they perhaps we will see more, I would say, modest growth compared to what they had.
Yeah, but we could also turn this table around and say that the risk for the whole company, Incap, has been decreasing since the risk with the biggest customers is getting smaller. We were talking 1 year ago 70%, and we are now in something 23, I think you said, like looking at the whole portfolio. So is this something you take into account when you plan strategically forward? Is this, this new setup?
Yeah, no. Of course, it has changed the dynamics of the company. That said, I'm saying that I see it, or Ante said it during the webinar as well, that it's an opportunity. Of course, our biggest customer or some other customer can also take off and sell. And I think this kind of, it will always be in the EMS business, so that you have some customer dependency, and then you balance it out for one or another reason, and then you end up with another customer dependency or the same again, and it goes back and forward. Of course, we are not turning down business if it makes sense and we can earn money for our shareholders. And so it's not so that now this customer is on 23% and we will keep it there for any price. Of course, if there's an opportunity and we can support them to get on bigger volumes and earn money on it, then it's good business for us. Then that is not wholly either. But that said, of course, comparing Incap now to, for example, 2021, 2020 or so, where we had similar revenues, then there's a totally different risk profile in Incap. Currently, we are very healthy when it comes to our customer portfolio and how that is distributed, and so with the dependencies and so on. So it is another Incap that you are looking at now, still strong financially, but with much less risks.
Yeah. That was the new kind of starting point that you were mentioning earlier. It's a new beginning also as well, kind of more possibilities there. Talking M&As going forward, just acquired, in July in the US, but you have a strong cash position, and M&As going forward is always on the table, you mentioned somewhere. So what's the situation right now? Are you looking actively?
We are looking actively, as we mentioned, or Ante mentioned as well during the webinar. We have a dedicated team. We have a strong pipeline, and I'm quite sure that sooner or later we will close some deal as well. There's always two parties in deals, but we have been working very systematically and working with many targets and companies, following them for longer times and have good relations. So I'm quite sure that sooner or later we will close yet another deal, so I'm positive there as well.
Okay. Outlook for the whole market. The market is supposed to grow about 7% or something. What's your view on Europe and the US?
Yeah, no, I think as you said, I think outlook is still that market will grow. Of course, there's uncertainties there. What we see in both US market and European market is that our like European Union and US state is getting more active in seeing electronics, and not only now for ships, but also EMS companies and so as a strategic resource, and starting to understand that we have a value, and so in security and so as well, looking at different military systems and defense systems and medical systems and other critical systems that you perhaps for political reasons want to have produced in a closer proximity and have control over. And I think that will have we have already seen effects of that by electronics moving out of China and then manufacturing moving out of China. But I think you will see that continue once these kind of trends become policies in the different countries, and so then we will see more. So I think the outlook is good for electronics, and yet again we see some of these kind of geopolitical or trends due to the geopolitical situations supporting getting more in business into Europe. So it looks good, I think.
Okay, so you have a good outlook, confident there. One last question. Talking about political and geographical tensions, has the turmoil in the Red Sea impacted your logistics or affected you in any way?
Not in a way that it has so far disturbed the production so that we haven't been able to handle it. But for sure, of course, we are also impacted as everybody in the same way, and these kind of uncertainties and prolonged logistic. How to say prolonged logistics, you can say, is never good for anybody. So hopefully this crisis will get solved and we can move on to more normal freight ways with from China to Europe and US.
I think it's a good way to stop right there. Thank you so much, Otto Pukk. Closing the books for 2023 and darkest hours probably over and new starting point just ahead.
Thank you very much.
Thank you.